that one leg, C plus I plus F, C is starting to dwindle a bit.
Right.
Let's assume you leave that out.
Yeah.
How do you play the other two?
Right. Well, the first leg would possibly be obvious, which is I. We do expect the industrial companies, the construction companies, capital goods manufacturers to do better going forward. The proxy plays are the banks and financials which are engaged in corporate lending. All throughout last 3 years or so, we had been playing India only through the retail lending private sector banks. Now, recently, we have added a few more corporate lending banks as well. So that is, I would expect some of the construction materials like cement also to do well. They've already done well, over the past couple of months or so. I would expect that outperformance to continue over the long term. So that is the first, set of companies that should benefit. At some point of time, I think consumption should also revive. If you think of India, there are close to 300 million families. There are possibly, how much? About 3 million passenger cars that are being sold. That's about 1%. So this situation in an environment of gradually rising affluence can't really sustain. We have a big brother who has shown us the way, and that's China. You think of the Chinese situation about 15 to 20 years ago, that's possibly pretty much where India is, with certain differences. Today, we are seeing more of the sharing economy coming in, it's more in vogue. So the kind of explosive growth rate that China had seen would possibly not apply to India. But still, even a moderate growth rate from the present levels of low penetration would be stupendous. So I would suggest that one should not ignore the consumer discretionaries as well. That would include autos, that would include household appliances, and so on. But in general, that consumer discretionary space over the long term should also be on investors' radar.
Okay, so let me ask you a counter that.
Right.
How do you play that theme, or which is a better way to play the theme? Would you bet on up trading being the key thing, in which the base to premium would be the key factor? So, branded shirts versus unbranded shirts, premium motorbikes versus the normal motorbikes.
Right.
Is that a better way to play it? Or do you continue betting on staples making a bit of a comeback? And by staples, I would also mean companies which don't have premium bikes, but standard bikes, for example.
Right. Our preference would be for the former. The company, exactly, for that theme of upgrading. Because today in India, premiumization, penetration, digitization. These are the three main drivers that India is benefiting from and likely to benefit from for the foreseeable time horizon. So, companies which are operating in niche segments, they're likely to gain more. Companies which have a wide distribution and therefore have created a massive moat for themselves, they're likely to remain in the driver's saddle. So that's really the main universe that we're looking at as the primary beneficiaries. I would also point out that today, if you look at China or consider where China was about, say, 20 years ago, in the mid-90s, close to 67% of an average Chinese's wallet allocation used to be in the basic necessities, basic food, basic clothing. Today, that proportion is 43%. Where did that remaining 24% go? It went to education, healthcare, discretionary consumption. India is heading exactly in the same direction. India is pretty much where China used to be 15 to 20 years ago. We can't ignore this massive transformation in consumer spending habits.
So in light of that, the auto space slowdown should be just a temporary blip?
I personally think so. So right now, of course, the situation looks dire. We have seen companies cutting down production by about 20-25%. So it may not really revive in the next one quarter. You would see the company earnings come out. Even the first quarter is likely to be quite disappointing. But at some point of time, for an investor who has a longer term time horizon, I think these investments at this present point of time make good sense.